morning as a forecast of a deep recession this year by the International Monetary Fund outweighed a monetary stimulus from China's central bank. Those shares out in China managed to close low as well, as investors worried about an expected sharp drop in the country's first quarter economic growth, which offset a brief boost from that widely expected cut to medium-term lending rates. Now, the central bank cutting that rate on its medium-term lending facility for financial institutions by at least 20 basis points to 2.95%. That's a record low. And they're doing that in an attempt to combat the economic fallout from the coronavirus health crisis. At the close of trade, the Hang Seng Index then in Hong Kong was down 1.2%, sitting then at 24,145 points. The Nikkei in Japan, 19,550 points there. It closed 0.5% lower, while the Shanghai Composite Index out in China then, 2,811 points. It's down nearly 2/3% there too. Let's head on over to the United States, where stocks jumped last night as optimism that the Trump administration could move to ease lockdowns from the coronavirus overshadowed what was worrying earnings reports from both JP Morgan and also Wells Fargo, the first in that earnings reporting season. The Dow Jones Industrial Average rising 2.4% to 23,951 points, while the S&P 500 as well gained more than 3%, 2,845. NASDAQ Composite adding 4% though, 8,515 points. A quick look at how the markets are faring overall, then a sense of negativity still in the market. And this all comes despite the fact that China has decreased that medium-term lending facility by 20 basis points. It was a much expected move, but the stimulus efforts around the globe become the question point. What else is there? What else can the rest of the world do? Right now, it seems like nothing. So those European markets head in a lower direction. On the local front, well, having seen the likes of the Reserve Bank and also then having had word then from National Treasury with regards to how much is needed, who will be trying to get it from, all the financial institutions, especially the multilateral ones, will be the ones we'll be looking out for. So the all share, unfortunately, going down a massive 3% today, led a lot more by those financial counters, which have taken a hit of around 7% as well today. A big fall off there, even after Capitec yesterday came out with a stellar set of earnings for that 2019 financial year, and then saying that they're not going to issue out a dividend in hopes then of trying to save more money as well. If we check in on the rest of the market as well, then also in negative territory for the most part when it comes to the commodities. Gold price had gone a little bit higher up a little earlier on in the day, but has fallen off ever so slightly. Platinum seeing some sort of strength there, while that oil price, clearly the production cut of nearly 20 million barrels per day not doing enough to keep the market at bay. It's now sitting still below $30 a barrel there. Quick look out then at the currencies. So these have certainly been weakening, and unfortunately, having started the day around 18.05 again against the US dollar, we've seen even more weakness, unfortunately. Where we get the money from, the drop in 100 basis points as well when it comes to our interest rate has seen investors perhaps shy away, not necessarily getting the same investment or bang for their buck as well on the local front. So it's 18.71 for a US dollar, 23.37 for that pound, and 20.40 for a euro. Very quickly as well, if we check in on the BRICS currencies, then this is currently where we sit. Stability, yes, but unfortunately still in negative territory. Let's chat to Makwe Masilela then from Makwe Fund Managers as we get a hold and a sense of where this market is going. What exactly is going on? Makwe, thank you so much for the time. Negativity all around. One would have thought that with the stimulus efforts pumped into some of these global markets, you'd hope that more liquidity, which means we can trade a little bit better. But it seems to be still a case of negativity all around.
Yeah, unfortunately, and good day to you. It's a question of, yes, we've seen all the efforts from central banks, and it's more of a coordinated effort. What you just mentioned about China now, that's the lowest. Back home here as well, yesterday we got our lowest interest rate as well. But I think the real question remains that what is driving the economies is the main economy, the real economy, not the stock market. So as a result, maybe one has to ask whether it's large or small or medium businesses, that All these initiatives that we've seen for the past month, have they started feeling them? No. Have they started seeing cash coming into their account to try to help them with the struggle that they're facing given the lockdowns? No. You ask the people who are staying at home now that since the lockdown, are they confident that come end of April, will they be getting their full salaries or will they be getting part of that? So far, people are not sure because people have not seen the results. Hence, we keep on emphasizing that the initiatives, all these packages, I think they're good. But the question is the speed. How can they quickly get to the real people so that they can start having some economic activity? And I think confidence as well continues to play an important role. I mean, if you get the likes of the IMF saying, listen, I think the global economy is going to contract by 3% or so. Back home here, we had our Reserve Bank saying, listen, the last meeting, they thought our economy will contract by 0.2%. So revising that to almost 6.1%, that tells you something that there's something that is much, much deeper than we can see now. I mean, for banks to also start acting like that. So confidence is not yet back into the markets, but markets be markets. The minute they see at least some glimmer of hope, the minute they see that when it comes to new cases of infections, they're starting to slow down, the minute markets start to be hopeful that some of the economies will partially start to reopen, then you'll see the markets going up. Hence, yesterday, we had a very good day because people were optimistic that the global economies will gradually start to open.
Will, however, the cut by the South African Reserve Bank do enough in the short term? And what I mean by that really is, yes, it's great, but surely there's a lag effect in when you begin to see that sort of cut come into the market. You've now made a 200 basis point cut. Yes, it's great and it does add impetus and stimulus, but is it not a very lagged effect for a little bit later on? We need Treasury right now.
Definitely, there will always be that because yes, we know that we'll start seeing the impact come end of the month when we start repaying less to anything that you are owing that attracts interest. But yes, it's a wise move going forward. But now the question still remains that yesterday you got comments coming from the likes of Capitec that they've been very cautious now when it comes to lending. So I think also defeating the purpose because the Reserve Bank is doing all these things so that there can be more liquidity, so that the banks can have enough cash to lend out to the consumer. So when you start getting a bank saying that they've been very cautious when it comes to lending, then you ask yourself that will we really see the real benefits? Or this will only help them as commercial banks to have enough liquidity into the market. But the intention are good that people must be able to have access to cheap money so that we can continue to spend in the economy and hopefully spending in a responsible way, because that's the only way we'll be able to get our economies to start growing, because that's the whole purpose of stimulus, to make sure that people still have access to be able to continue to spend. And I think monetary policy has to be coupled as well with fiscal policy. We still have what the cabinet has to say as well with the package that Tito apparently tabling to the cabinet today, that will they come with the fiscal policy that will help the monetary policy so that we can have the real effect. And also not forgetting your socio-economic policies so that everyone benefits from both monetary and fiscal policies.
To get that money, should we go to the IMF? Should we go to the World Bank? Should we go to all of them?
I don't think we have to panic. Remember, the IMF, they've got a special package. They've got almost 250 billion that has been approved, or 100 billion that has been approved. That's strictly for coronavirus, and they're going to offer you that at low interest rates or zero interest rates. So we don't need to confuse that with the normal way of going to IMF, where you need IMF to support your balance sheet, where you've got issues with your balance of payments. In this instance, is just to make sure that you deal with COVID-19.
So that becomes really interesting there. Okay, on the local front then, Marco, you also got SAA, and unfortunately the Minister, Pravin Gordhan, yesterday, that leaked letter showing that, well, actually, we're not going to be able to fund you anymore, and this is essentially it from us. Is this goodbye SAA?
It is. It's a harsh reality, and I think Tito was right last year when he said, listen, I don't think we need SAA. Here it is. We're all now starting to accept that we don't need that because, the guys keep on looking for money. And unfortunately, when it comes to international routes, they cannot compete with the likes of Emirates. When it comes to local routes, they cannot compete with your local carriers. So maybe they're only left with regional ones. But yes, as it stands now, the guys are not operating. The only flights that they get to operate, that's when they have to go and get South Africans who are still trapped abroad. But as we are talking, the guys are not making money. But it's one of those harsh decisions that we have to make. This is the new normal that, guys, we cannot continue to put in money.
Yeah, and I mean, it makes perfect sense, right? Do you think this harsh line becomes the kind of tone that government will set for other SOEs now moving forward? Have we finally gotten to a point where enough is enough?
I think we did ultimately, and I think those are the kind of decisions that people have been saying. We need the structural reforms, no matter how harsh they are. But this is what we need to make sure that we start getting our economy to grow going forward.
Yeah. Makwe, always great chatting to you. Thank you so much for the time. Really appreciate it. Stay safe there. Makwe Masilela from Makwe Fund Managers there joining us as we unpack that market picture and certainly the economy as a whole. Speaking about